are actually the ones that are most like just a general subledger. And these two give us that added level of aging as we saw similar to the accounts receivable. So let's open up one of these first. Let's open up the vendor balance detail, right-clicking and opening. Going to the tab to the right, and let's see what we got. What do we got? Noting that once again, this is a report that deals with a balance sheet account. Balance sheet accounts report as of a point in time instead of a time range, and therefore we don't need a date range. Notice we don't have a date range up top as we would in a performance report like an income statement report. So the accounts payable shows on the balance sheet how much people owe us as of a specific point in time. This report shows accounts payable we're talking about, how much we owe a vendor as of a specific point in time. These show us the specific vendors and how much we owe to those specific vendors. Now they do give us details. So you might say, hey, look, they have dates down here. Why don't I have a date range so that they can show us the dates within a range? Well, these date ranges aren't really tied to a range. They're just tied to if the bill has not yet been paid. So any bill, the bill could have been 10 years ago if you haven't written it off yet or paid it in 10 years. It would still show up here if the bill had not yet been paid. Now, if that was the case, it's possibly a bill that's never going to be paid, and you got to deal with how to delete it or how to remove it without messing up your retained earnings and so on, but that's a different story. So that's going to be the idea here. The bottom line is the end balance of $1,602.67 should tie out to what's on the balance sheet. If I go to the balance sheet, there's the $1,602.67. The subledger has to tie out to the general ledger. What if it doesn't? Well, in accounts receivable, like in accounts payable, like we saw with accounts receivable, the system of QuickBooks will basically force it to be in balance. How does it do that? Well, notice that the accounts payable is, for normal reporting purposes, just an other current liability. It would just be a current liability for normal reporting, but they give it its own special account because it has its own special account type, which means that for that specific kind of account, accounts payable, it's going to add a subledger breaking out and tracking by vendor, and it's going to force us every time we record something to accounts payable to enter a vendor. We won't be able to record it typically if we don't enter a vendor. And that'll force the subledger to always be in balance. So that's good, but like we saw with the accounts receivable and like we will see when we do the adjusting entries possibly, that could cause a problem because when we do adjusting entries, we don't want to mess up the subledger. And so that's when there's pros and cons to any system. Now, if I hit the plus button, remember that I increase accounts payable with a bill and then I decrease it with a pay bill. If you had to do an adjusting entry at the end of the year, you might do that with a journal entry. You could do a journal entry to the accounts payable, but it's going to look funny because usually we want these two forms to tie out together. And that's why the journal entry causes problems, because normally if I enter a journal entry, I don't want to have an impact on the subledger and on a particular vendor because that'll mess up the bookkeeping and the connection of these two forms. So we might look at that a little bit more later, or at least we'll look at the accounts receivable side of the similar kind of problem to see how we might deal with that. But just to point that out. So that means that now this report should always tie out, but we don't typically generate this report internally. We would use it for external reporting to give it to the client or our supervisor, or to batch it together to create something in our financial statement report package possibly. But for internal purposes, of course, we would normally be going to the tab to the left internally, opening the hamburger, enter the expenses tab and tracking the bills that are outstanding with the vendors here, the bills here, or in an actual form in the bill payment area to actually pay them. Okay, so then